Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be going over step 1, your rainy day fund, and why this should be your very first step prior to beginning your investment journey. So a lot of the information I'll be covering is from Dave Ramsey's Financial Peace. This is a course I took many years ago, and I still use it to this day. I still follow the basic principles. I have a rainy day fund myself, and we're going to be covering that. We're going to go over why it should be your goal and what the goals are, why it should be a priority, what is a rainy day fund, why you should be saving it, what you should do once you hit your goal, and then some of the next steps. So of course, if you're brand new to my channel, I do make stock market, financial, and investment videos daily, so do consider subscribing. So again, it's only 6 slides, so very quick, 5 to 10 minutes at max. So the very first step you should be taking prior to your investment journey is setting a goal for yourself. Did you know that the Federal Reserve wage is $7, or the Federal Reserve minimum wage is $7.25? That is $15,080 per year. So knowing this information, you may be out there and you might be making minimum wage, or you might be making more. So if your income is under $20,000, make a goal of $500 for yourself for the year. Otherwise, make a goal of $1,000 for the year. And of course, I do have a picture of the gate, because without goals, you have nothing to strive for. I myself take it as a priority to create short-term goals, 2 or 3 short-term goals that can be accomplished within 3 to 6 months, and then some long-term goals that can be accomplished within 2 to 5 years. So these are always goals that you should have written down, and this should be your primary goal. If you don't have $500 as a savings in your savings fund, or $1,000 in your savings fund, this should be for your first priority. So priority, saving needs to be your #1 priority. Pay yourself first. If you're under $20,000, pay yourself 5% of your net income. If you're over $20,000 or other, of course, then you need to be paying yourself at least 10% of your net income after taxes each month. Example, if you make $1,000 in a month, 5% would be $50, 10% would be $100. And quick math, 50 times 12 is $600 you could be saving yourself in a year. So it's very easy. Just putting away $50 a month could be $600 of savings in a year. And if you put away $100 in a month in 12 months, that's $1,200 that you just set yourself up for your future. And rule of thumb, always pay yourself first, then your bills. What is your emergency fund? Think of your emergency fund not as an investment or money that you'll use to invest, but use it as your insurance. When stuff hits the fan, this is your money to cushion your blow. Do not touch this fund for regular purchases. Your emergency fund is your first priority. Do it quick before considering investing. Why are you saving? You are saving for yourself, your family, your future. So why will you be saving this money for? You'll be saving it for your needed purchases, your down payment on your mortgage for a brand new house, if that's something you'd like to have, a vehicle for work. These will basically be needed necessities to provide for yourself and your family. #2 should be your emergency fund. If you're laid off, if you're fired, if you get into an accident and you can no longer work, this rainy day fund will give you a chance and some breathing room between just having to stress out and go looking for another job right away. If you are fired, you can take a 1 week or 2 week while you're getting, I don't know what it's called when you're laid off, you get some sort of pay sometimes. Then you do have a bit of a cushion. And #1, you should be saving for your wealth building, long-term investing, because this is your first step. Once you have that $1,000 in the bank, you can begin your long-term investing afterwards and building for your retirement. Hitting your goal. So once you've hit your goal, this has been your initial savings. This is your first baby step into your financial future. Your step 1 should be $1,000 in the bank, or $500 if your household income is below $20,000. Now, of course, if you want to increase your percentages that you're paying off to yourself and you want to save $1,000, $2,000, up to $10,000 in your savings account for your rainy day fund, go for it, because what is your next step? Are you ready? Your next step should be 3 to 6 months of expenses. Now, I know that sounds like a lot, and you heard that right. You have saved $500 to $1,000 now, but keep going. Do not stop. Now you have the pattern down. You can continue. You have this pattern. You can continue to work on paying yourself 5 to 10%. Heck, if you want to throw in a bonus and give yourself a bonus here and there, do it, because it will help you out in the end. You need to save at least 3 to 6 months for your long-term emergency fund. Remember, number 3 should be your needed purchases. Number 2 should be your emergency fund. It should be used for your emergency funds. And then number 1, once you have your 3 to 6 months of expenses, go for your wealth building. Now you can begin your investment journey. And of course, in our future videos, I will be showcasing those steps in the process that should be taken in continuing in your wealth building once you've knocked out your first step, which is building your $500 to $1,000 cushion, and then your 3 to 6 months of expenses. So that is it. Very quick. This has been Brent with I'm the Financial Investor. And of course, if you haven't checked out my Facebook, it's Financial Investor 101. And then I do have my website, financial-investor.com. And I do post quite a bit of little posts on there and here and there. And I do have other resources that are available for all other investors. And if you're just wanting to visit the page, to say hello. So that is it for this video. If you have watched up into this point, I do want to thank you again for watching the video. And if you do like the video, hit that like button, and please remember to subscribe for future financial videos. If you have any questions or want to say hello and you are familiar with the Dave Ramsey book, go ahead and leave that in the comments below. This has been a really good and educational book in the past, and I opened it up again today, and I figured, hey, why not make a video on it to showcase what other, what should be your main step prior to investing. And I believe this is a good first step, because you don't want to be pulling money out of the stock market just to buy a car or fix a repair. You want to have that cushion. So again, thanks for tuning in, and I will see you next time. Bye.